You know what's wild to me? Most people have been paying into Social Security for decades, faithfully, automatically, every single paycheck. Yet when it's finally time to use the system, they can't get anyone to pick up the phone, they can't get clear answers, and they can't even get a basic appointment without jumping through hoops. That's the betrayal I want to talk about today, because the deal behind FICA was never just pay in and maybe you'll get a check. The deal was also, when life happens, retirement, disability, a spouse passes away, there will be a functioning agency there to help you claim what you already paid for. And right now, that's exactly what's breaking. Let's back up to what we all agreed to, whether we realized it or not. Since the system began, workers have paid a dedicated payroll tax. For Social Security, it's 6.2% from you and 6.2% from your employer, up to the annual wage base, right now commonly discussed around the $180,000 range. Separate from that, there's Medicare tax, but I'm not getting into Medicare today. I'm focusing on Social Security and the promise behind it. For 20, 30, 40, sometimes 50 years, people watch that money leave every paycheck. And the expectation is simple. If you make it to retirement age, 62, 67, 70, then you should be able to file and receive benefits correctly and on time. If you become disabled and can't work, you should be able to file for disability and have your claim handled competently. If your spouse dies, your survivors should be able to get survivor benefits without getting lost in a maze. That's not asking for a favor. That's what you already paid for. Here's the part people don't realize. A tiny slice of what you send in every paycheck is effectively supposed to fund the administration of the program. Customer service, processing, staffing, phone lines, local office support, training, accurate guidance, follow-through. It doesn't matter if that slice is small. If the agency can't function, the promise collapses in real life, even if the law still exists on paper. And that's where we are. The most common complaint I hear isn't even about politics or trust fund projections. It's basic operational failure. People can't get through on the phone. People get disconnected. People get told the wrong thing. People get told they need documents they don't actually need. People are told they must provide information that the agency itself is fully capable of locating. People wait months for decisions that should take weeks. People lose payments because of delays, miscommunication, or bad instructions. When you've paid into a system your whole working life and the system can't even answer a question or schedule an appointment properly, that's not just inefficiency, that's a broken bargain. And it's happening at the exact worst time demographically. The baby boomer wave, people born roughly 1946 to 1964, is massive. Every day, thousands of Americans are hitting retirement ages, starting benefits, transitioning to Medicare, applying for spousal benefits, applying for survivor benefits, or dealing with disability. The demand for service is rising, but staffing has not risen with it. In fact, by many accounts, staffing has been pushed to multi-decade lows. So the public walks into a system with more demand, fewer trained workers, and more complexity than ever. And no, this isn't new. People like to act like these service problems appeared overnight. They didn't. The service crisis has been building for years. It's the result of long-term underinvestment, political neglect, and leadership churn, with the public paying the price. Now, on top of the customer service failure, there's the funding reality, because that's the second half of the promise people worry about. Will the money be there? Social Security operates mostly as a pay-as-you-go system. In plain English, workers today fund most of the benefits paid today. In recent years, roughly around 90% or so of benefits have been covered by current payroll tax revenues, with the remaining portion coming from the trust fund, basically the system's savings account built up over time. That trust fund is real. It's not a myth. It's not some fictional number. But it is being drawn down year after year because the system is paying out more than it takes in. And here's where people get confused, so I'm going to say it cleanly. Nobody needs to steal the trust fund for it to run down. If you withdraw from savings faster than you replenish it, it eventually hits zero. The projections vary depending on assumptions, but the broad warning has been consistent for years. If lawmakers do nothing, the trust fund eventually gets depleted, and then benefits can only be paid out of incoming payroll taxes. That's where the widely discussed automatic cut number comes from. often estimated in the neighborhood of low to mid 20% reductions. So you've got two failures happening at the same time, a service failure right now, a funding failure approaching if nothing changes, and both of them represent a broken promise. Now here's what makes me angry on behalf of ordinary people. There is no shortage of solutions. There is a shortage of political will. There are plenty of proposals that get talked about again and again. Raise or eliminate the wage-based cap so higher earners pay Social Security tax on more wages. Adjust the benefit formula in certain brackets. Adjust retirement ages, politically explosive. Means testing, also explosive, and it changes the nature of the program. Change how benefits are calculated, phase-ins, carve-outs, you name it. The point is not that any single idea is perfect. The point is that doing nothing for decade after decade is a choice. And that choice is what produces the "we tried nothing and we're out of ideas" moment, where the public gets told cuts are inevitable and phone lines are jammed, as if no one could see this coming. Now let's bring this back to real life, because if you're watching this, you're probably not asking for a policy lecture. You're trying to protect yourself and your family from getting burned by a system that's hard to navigate even on a good day. So let me translate the biggest practical issues people are running into and what you can do to avoid losing money. One of the biggest misunderstandings is how benefits are funded and why the trust fund matters. People ask, why are people working now paying for people already collecting if those retirees already paid for themselves? Because that's how the system was designed. You paid in, yes, but the check you receive today is largely funded by today's workers plus a trust fund supplement. When you were young, your payroll taxes funded the older generation's checks. That's the social insurance model. It's been the model since the beginning. The second practical issue is the earnings test and overpayments. If you claim Social Security before full retirement age and you keep working, there is an annual earnings limit, often discussed around the mid $20,000 range in recent numbers. If you go over that limit, benefits can be withheld using a formula like $1 withheld for every $2 over the limit. Here's why overpayments happen constantly. People don't report earnings changes promptly, or they genuinely don't know what they'll make by year end. Or they decide it's not worth spending hours trying to reach someone, so they let it ride and deal with the overpayment later. Then the next year, the system matches earnings data and says, "We overpaid you, pay it back." So if you're collecting early and working, treat this like a live wire. Don't assume the system will magically get it right in real time. The third issue is divorce-related benefits. A lot of people, especially women, don't realize they may qualify on an ex-spouse's record if the marriage lasted at least 10 years and certain eligibility rules are met. They assume, "I didn't work enough," or "I can't get anything," or "he already claimed, so I'm blocked," or "I'm divorced, so it doesn't count." Often not true. But then the system adds a ridiculous hurdle. Some callers get told they must provide the ex-spouse's Social Security number or no appointment will be scheduled. That is not how it should work. The agency can often locate a person's record using identifying information like full name, date of birth, place of birth, and other details, especially when you provide a marriage certificate and divorce decree. If you run into a representative who refuses to move forward without an SSN, don't assume that's the final answer. Call again, ask again, escalate if needed, because "we can't find them" is frequently an employee limitation, not a system limitation. And if you first attempted to file earlier, this part is important, make sure you ask about protecting your filing date so you don't lose months of benefits due to an internal delay or a bad rep. Document the date you called. Document what you were told. The difference between "you called in March" and "you filed in May" can be real money. Another major topic is disability, and a specific scenario comes up a lot. Someone applies for disability, then later returns to work. People ask, "Can I still get paid for the time I was out of work?" There is a concept often referred to as a closed period of disability, where a claimant can be found disabled for a defined period that lasted long enough to meet the program's duration rules, even if they improved later. But in the real world, if you return to work quickly and your claim is still at the initial levels, many claims get denied because you're no longer meeting the standard at the time of adjudication. So if you're in this situation, you need clarity on the timeline, how long you were unable to work, what the medical evidence shows, and where the claim is in the process. Don't assume the system will interpret it the way you interpret it. Now let's talk about survivors and children, because this is where delays and bad service become cruel. If a spouse dies, the surviving spouse may be eligible for benefits as early as age 60, or earlier in certain circumstances. But survivor benefits are one of the areas where small filing mistakes can cost a lot, because there are strategy choices involved. Sometimes a person may take survivor benefits first and delay their own retirement benefit to grow, then switch later if their own benefit becomes higher. But you can't do that correctly if you can't get competent support or if you're told wrong information. And when children are involved, minor children or disabled adult children, the benefits can be significant, but the rules are technical. A child can receive up to 50% of a worker's full benefit amount, subject to family maximum rules. A spouse caring for that child can sometimes qualify for a child in care benefit, also subject to earnings limits and the family max. This is exactly why customer service matters. These are not nice-to-have add-ons. These are the checks that keep a household afloat after a death or during disability. And if the agency can't staff phones and offices properly, families lose time, lose months, and sometimes lose eligibility windows. Another question that comes up constantly is grandparents raising grandchildren. Can a grandchild draw benefits on a grandparent's record? Sometimes, but not automatically. The general concept is that a grandchild may qualify in specific circumstances, such as when parents are deceased or disabled and the grandparent meets support and custody-related conditions, or where adoption legal responsibility is involved. This is one of those areas where you should not rely on random comments online. The details matter. Now, underneath all of this, there's the emotional part of the betrayal. People feel like they did their part and the system didn't do its part. They paid, they worked, they complied, and when it was time for the system to serve them back, it wasn't there, at least not in a way that feels reliable. So what does FICA betrayal really mean? It means the program is failing on two levels at once. It is failing as a service organization, and it is failing as a long-term guarantee because lawmakers keep refusing to do the maintenance. And here's the warning I want to leave you with. If the agency is already struggling to answer calls and process claims today, what do you think happens as the beneficiary load increases and staffing remains strained? Even if benefits don't get cut tomorrow, delays and mistakes can function like a cut in the real world when you're the one missing checks. So protect yourself. Keep copies of your documents. Know your key dates. Write down who you spoke to and when. If you get a bad answer, call again. If you're working and claiming early, track your earnings carefully. If you're divorced and think you may qualify, don't let a no SSN, no appointment gatekeeper end the conversation. If you're dealing with disability, understand the timeline rules and be realistic about how the system evaluates returning to work. If you're filing for survivors, don't rush blindly. Ask about strategy, because the wrong starting choice can lock in lower payments for years. And finally, if you're angry, good. You should be, because you upheld your end of the bargain every payday. The question is whether the people in charge will ever be forced to uphold theirs.